Hello everyone, I am Pratap here. We are at a part 2 of lesson 18. This is the first practical session for odd enhancers. And this lesson is having dependency on the earlier lessons. In case if this is your first visit to our channel, please complete the earlier lessons. I kept all our earlier training lessons in a playlist, Supply Demand Zone Price Action course. I have also provided the link to this playlist in this YouTube video description. You just click the link, you will get into this page and then scroll down to the bottom of this page, and starting from lesson 1.1, you will be able to access all the lessons in an order. I have also provided the link to our Telegram channel in this YouTube video description. Please join there, it will be helpful to you. Each time when we release a new video, we will provide an update on the channel. Now let's get into the first practical session. So in this lesson, let us analyze Bajaj Auto. And let us analyze this chart based on a weekly income trade. So our higher time frame should be weekly time frame. So this is the weekly chart. Here we can clearly see a rally, two base candles and a rally candle. After that again we have seen a rally candle, base candle and a drop candle. That means we can draw demand zone and supply zone on the weekly chart. So let's draw. First let me draw the weekly demand zone and let me change the color to weekly demand zone. This is the weekly demand zone, and we'll also draw the weekly supply zone. Okay. And inside this weekly demand zone and supply zone, let us identify daily demand zones and daily supply zones. So I am shifting the time frame to daily. So within this weekly area, let us identify daily zones. So here we have a daily supply zone, rally, 3 base candles and a drop candle. Why we need to draw these daily zones? Because daily is the intermediate time frame. Weekly is the higher time frame. Higher time frame zones are required for calculating the curve, that is a location. You divide this entire area into 3 equal parts, low on the curve, equilibrium and high on the curve. But why you need intermediate time frame zones? Because we can identify price direction by using HTF zones and as well as the ITF zones. So ITF is daily, so you have to draw the zones. So here we have rally base drop. So here we have a daily supply zone inside weekly. Let me change the color to daily supply zone. Okay, what about daily demand zone? We have a drop candle, we have 1, 2, 3, 4, 5, 6 base candles and a rally candle. So let us draw a daily demand zone. Because the drop, the lowest of the leg out or leg in or base candles. Here leg in is having the low value in the drop candle. So this is the daily demand zone. Now we have identified weekly zones and daily zones. So let me go to weekly first. How we drawn? This is the weekly zone. Let me adjust properly. Zone, some gap is there. Okay, this is the weekly supply zone. Okay, first we have drawn rally, 2 base candles rally and then rally base drop, that is weekly. After that we have drawn 2 daily zones. The one is a daily supply zone, rally, 3 base candles and a drop. And we have a daily demand zone. We have a drop, 6 base candles and a rally candle. So this is HTF and ITF zones. Weekly is HTF and daily is ITF, intermediate time frame. And what about lower time frame? That is our entry time frame. That is 75 minutes. For weekly income trade, 75 minutes. So go to the 75 minutes. Now identify the nearest zones for the current price. Here the nearest supply zone is rally, 3 base candles and a drop. This is the 75 minute zone. Let us draw the zone. This is the 75 minutes supply zone. You may ask a question. We have a drop, 2 base candles and a drop candle. Can't we draw a zone? No, we cannot. Because this ERC candle is not proper. And moreover, see the closing of the prices and all that will come inside the zone, which is not at all an acceptable structure if the zones are like this. ERC candle you can accept, but the body should not be inside the zone. At least it should be below the zone. So that is the reason why it is not at all a valid zone. After that you have another ERC candle. In between there are no base candles. So we cannot consider. We have only one zone inside the daily zone. Daily is inside the weekly zone. This is the zone confluence. You already learned. Okay, fine. What about the what about the 75 minutes demand zone? Here we are able to see on 75 minutes demand zone. Can you find the most recent to the current price? See here we have a drop candle. We have 3 base candles and we have a ERC candle. You may ask a question. What is the difference between this ERC candle and this ERC candle? This ERC candle, we get the hidden body. See, from the close, you can add the hidden body up to this here. So basically, this is a hidden zone. Drop 3 base candles and a rally candle. This is a hidden zone. So that is the reason why we are drawing the 75 minutes demand zone. So for the current price, this is the nearest 75 minutes demand zone. This is the nearest 75 minutes supply zone. Okay, how to plan the trade? You have to plan the trade because this demand zone is already given a trade. You have to look for the supply zone. Why we have to give importance to the supply zone? The reason is we have to trade in favor of the trend. Currently the trend is downtrend. Where do you identify the trend? In intermediate time frame. Where is intermediate? Daily. Go to the daily. Is the trend is a downtrend? Yes. We have a drop base rally is there. This is a demand zone. This is violated. Let me show you. This is one daily demand zone is violated. There is another daily demand zone is also violated. If 2 demand zones are violated, what happens to the trend? When the prices violated the first demand zone, trend is changed to sideways. Earlier it was uptrend. Now uptrend is changed to sideways. Now the second demand zone is violated. Now sideways is changed to downtrend. Now let us delete. Now you may ask a question. Can't the trend change by the time prices reaches to the supply zone? No, it won't change because there are no supply zones. This is only the immediately available supply zone. If this weekly supply zone is violated, then trend will be changed to sideways. If that is the case, your trade will be stopped out. But what we are thinking, we have to plan in favor of the trend. And what we are expecting by the time prices enters into this 75 minute supply zone, the prices will turn down and again it will reach this demand zone. That way we get the huge target. This is our plan. Whether our plan will work or not, depending on the price action in the coming days. But at this point of time, everything is in our favor. If something wrong happens to this price action in the coming days, probably our analysis will be changing, our statistics will be changing. But at this point of time, for taking our trade in this zone is favorable because it is in favor of the trend. Not only in favor of the trend, other conditions also should satisfy. That is what you are going to check now as part of this. Because the trend is our favor, we selected this supply zone. Now, is this supply zone is really good? For that, we need to look into the odd enhancer score. That is what we are going to calculate. We already identified 8 parameters. These 8 parameters will give the score, a maximum score of 15. In that, at least we should get a 12. Because the trend is down. In downtrend, at least 12 we should get. If it is sideways, at least 11 we should get. The minimum score we should get. Okay, fine. Now let us evaluate the parameters one by one, odd enhancers. So first let's start with the LTF zone. So for that I am shifting to 75 minutes. So our focus is on the supply zone. We are trying to find the odd enhancer score to the supply zone. So what is the first parameter? Odd enhancer score. The first one is zone achievement. If it is violated opposing zone, we get a score. Which zone achievement? LTF zone achievement. See, always except trend and price direction, remaining all parameters are related to lower time frame. Price direction we see in HTF and ITF. Trend we see in ITF. So remaining all parameters, you will identify at LTF zone only. Lower time frame, that is 75 minute zone. So that's why let us analyze. First let us check whether this zone got any zone achievement. Yes, it got zone achievement. Here we have leg-in candle, 2 base candles and a rally candle, follow through candle. This is the way you can draw a zone. This is in 75 minutes time frame. This zone is violated, immediately it got the zone achievement. Not only this, the same zone, the 75 minutes supply zone is also responsible for breaking one more demand zone. Here we have another demand zone. Even this demand zone is violated because of the supply zone. Not only this, even below that there is one more zone is there. Even the third demand zone is also violated. The reason is this 75 minute zone. That means this 75 minute supply zone is responsible for violating the 3 demand zones. But whether it violates one demand zone or whether it violates 3 demand zones, it gets only one achievement, that is called zone achievement. Even if it violates 1 or even if it violates 3, the maximum score it will get is only 2. Only 2 is the maximum score. Don't think that first demand zone we get 2 score, second demand zone another 2, that is wrong. Whatever the number of demand zones are violated because of this supply zone, this supply zone gets only one achievement, that is violated opposing zone. And it gets only the maximum score 2, that's it. Violated opposing zone, the maximum score is 2, that is what we have seen. Violated opposing zone. Okay, for this I have developed a template. I will be sharing with you at our Telegram channel. This is the template I have prepared so that it will be easy for you so that each parameter you can note down and you can find the score. Which stock we are doing this? Bajaj Auto. So the stock code is Bajaj Auto. Actually this is a trading view, but NSE code is Bajaj-Auto. Trading view has given underscore, but this is NSE code. Which zone, LTF zone you are doing these calculations? To which supply zone you are finding? We are finding for supply zone, 75 minute supply zone. So your LTF zone is 75 min supply zone. So now what is the zone achievement we got? What is the score we got? By violating the opposing zone, we got a maximum score 2. So let us enter the value 2 here. So we got a OE score 2 for zone achievement. Next, base candles. How many base candles are there? Here we already learned for base candles, if they are between 1 and 3, we get a score 2. If they are between 4 and 6, we get a score 1. If the base candles are more than 6, we get the score 0. So how many base candles are there? We have 3 base candles, rally, 3 base candles and a drop. 3 base candles, up to 3 base candles, we get the maximum score 2. For 1, 2, 3, the base candles, the maximum score we are going to get 2. This is the second parameter. And the third parameter is zone freshness. Is it a fresh zone or is it a tested zone? So what is the score we are giving? For fresh zone, if it is a fresh zone, we are calling it as an excellent and we are giving it score 2. If it is a tested zone, we are considering it as a okay and we are giving score 1. Because high liquidity zones get more and more testing. So that is the reason why if more than one test, people will be giving 0 score. But we are not doing that. We have improved the system because we identified a concept called high liquidity zones. Because of that, to give benefit of doubt as a benefit of doubt, we want to support multi-testing. That's why instead of giving 0, we are giving the score 1. But in the old system, if it is one test, you will give the score 1. If it is more than one test, you will give the score 0. But we are not doing that. We have slightly improved because we identified a concept, high liquidity zones, which supports multi-testing. So keeping that point in mind, instead of giving 0, we are giving the score 1. But what about our supply zone? Is it tested? No, it is not yet tested. The 75-minute zone is not yet tested. That means it is a fresh zone. For a fresh zone, we give the maximum score 2. So I am entering the value 2. What is the next parameter? RR. What you learned about RR? If it is 1:4 or more, we are considering excellent, we are giving the maximum score 2. If it is between 1 and 2.5, we are giving the score 1. Between 1:2.5 and 1:4 in between. More than 2.5 and less than 4, we are giving score 1. If it is less than 1:2.5, risk is 1, reward is 2.5, we are considering it as a poor. In the old system, or even old system is also good for freshers. If you are a beginner, now you are learning the concepts. Follow the old system rules. Instead of 1:4, consider 1:5. If it is 1:5 only, you give score 2. If it is between 1:3 and 1:5, it is between 1:3 and less than 1:5, then you consider it is good and give a score 1. If it is less than 1:3, then you give the score 0. If you are a beginner. But if you are already having some experience and you are having good exposure in supply demand zone concepts, you are having good confidence, then you can follow these values. Now let us look into the chart. So this is our supply zone and this is going to be the demand zone. At this point of time, we know market is dynamic. It may create a new demand zone and then it will go. At the time, our RR will be reduced. But at this point of time, let us assume this is the scenario. Let us assume it doesn't change. If that is the case, if there are no new demand zones, prices directly going and hit the supply zone and coming down. So this is going to be the target. So based on today's price action, we are calculating. If the price action is changed, you need to change the values in your Excel sheet. Based on that, again, you need to take the decision. But as on today, what is the price action? Based on that, we are doing our analysis. So, okay, what is the RR? We already learned, I already explained you a tool called, short position, long position and short position. Because it is supply zone, we use a short position. Just click the tool and again click here, you are getting this. Now you just adjust these values. And here this is going to be your stop loss a little above the digital line, you keep the value, and your entry is going to be, let us assume we are taking type 1 proximal entry. Let us assume we are taking type 1 proximal entry. And then this is your target, somewhere here, close to this. So what is the RR it is showing currently? It is 1:6.7, that means close to 1:7. RR we are getting. So 1:6, that means what is the maximum score we can give? The 2 we can give, because anything above 1:4, or if you are a beginner 1:5, we can give the score 2. So we got a very good RR here. So based on this, see here, anything above 1:4 if you are an experienced person, or anything above 1:5 if you are a beginner. So let us enter the value 2, because it is above 1:4 or even above 1:5. So what about zone strength? Okay, I am deleting this RR. What about the zone strength? We have a rally, 3 base candles and a drop candle. This drop candle is an explosive candle. This is bigger than the large candles, much bigger than the large candles. So this is an explosive candle. For an explosive candle, the score is 2. Leg out with high explosive, leg out with gap, leg out with follow through. If any one of these conditions met, you have to give the score 2. Any one. If all the 3 are existing, still the score is 2 only. In this order, whichever the first, you give priority to that. High explosive, follow through or follow through. See here, it is even supporting follow through also. So it doesn't matter whether it is follow through is there or not, high explosive, that is good enough. Follow through is also there, good, very good, very good. Excellent, excellent. So you have to give the maximum score 2. So our zone strength is also excellent. I am giving the value 2. What about EMA 20 Confluence? Who should have EMA 20 Confluence? Our supply zone should have EMA 20 Confluence. Because 75 minutes EMA you cannot take. You can either look for your ITF Confluence or HTF Confluence. You can also look for LTF Confluence if your LTF zone is daily zone or above. Your LTF zone is weekly zone. But if your LTF zone is below daily zone, you cannot look for LTF Confluence. LTF EMA Confluence. But you can look for ITF EMA Confluence or even HTF EMA Confluence with your supply zone. That is what you have to do. Okay, currently we can't check with 75 minutes. 75 minutes EMA Confluence is invalid. So let us check to daily. I'm changing the time frame to daily. So this is the daily EMA, the blue color line. Is it having any EMA Confluence here? No. So we can't, it is not having. Okay, at least HTF EMA Confluence. What is HTF for us? Weekly. Is weekly is having EMA Confluence with the supply zone? No. So that is the reason why this is not having EMA Confluence. When it is not having EMA Confluence, which value are you going to add? We are going to add 0. See, demand zone with EMA Confluence in uptrend, you have to give the score 1. Or supply zone with EMA 20 Confluence in downtrend, then only you have to give the score 1. Other conditions 0. Anyway, EMA Confluence is not there, so we will be giving the score 0. And the next one is a trend. We already learned a trend. Demand zone at uptrend is excellent. We give score 2. At demand zone at sideways trend, we give score 1. Similar way, but supply zone at a downtrend, we give the score 2. Supply zone at sideways trend, we give the score 1. Okay, which time frame you have to see? Trend always we look into ITF time frame. Trend, we will not look into the LTF time frame. We will not. Trend always we look into the ITF time frame. What is ITF? For a weekly income trade, daily. So what is the daily trend? Daily trend is a downtrend, because already I told you, this is the first demand zone is violated, this is the second demand zone is violated. By violating both these demand zones, trend is changed to downtrend. Now while going up, you need to look for anticipatory trend. What is anticipatory? In case if any demand zones are there, if it violates and then goes, your trend will be changed by the time it is going to the zone. But in between, are there any demand zones? No. So prices will be keep on going up. At this point of time, there are no demand zones. That means that there is no possibility that the trend will be changed by the time it reaches to this supply zone. That means trend will be maintained, downtrend, up to this point. Only this daily zone is violated. The daily zone, the intermediate time frame zone is violated, then only trend will be changed. Because in between there are no daily demand zones, obviously there is no possibility of changing the trend before reaching our 75-minute zone. Because 75-minute zone is our entry zone. Because the trend is a downtrend, for supply zone downtrend, always we have to give highest score, that is 2. So we are giving the value 2. And the next one is a price direction plus a curve. And if you did not complete price direction and decision matrix concepts, you will not be able to understand this. You have to complete those lessons. I have observed some of you did not complete those lessons. But in the last video, you commented that you did not understand this concept, price direction plus curve. You won't understand price direction plus curve without completing the earlier concepts. That's why I clearly told you this topic is having dependency on the earlier lessons. How can you understand if you skip the earlier lessons and directly get into this? Price direction is a powerful concept. Price direction is bringing a lot of accuracy in our analysis. So how do you ignore that? We had a detailed discussion on the price direction with the practical examples. And then again I explained decision matrix for bullish trade setup and bearish trade setup. You have to go through those lessons and then only you have to get into this session. It is a simple concept. What is the price direction? How currently prices are traveling at HTF time frame and at ITF time frame. We don't bother about the LTF time frame because that is the entry zone area. But HTF price direction, LTF price direction, they will impact your trades on the LTF. So what is the current HTF price direction? HTF prices are traveling, currently they are traveling from supply zone to the demand zone. Prices haven't reached into the weekly demand zone. See here, this is the weekly demand zone proximal, the zone high. This is the one Let me draw the blue color because all these are all overlapped. You might get some confusion. That's why let me draw here. See, this blue color area is zone high of weekly zone. Is prices crossed this blue color line? No, they didn't. They are still above that. That's why current price direction is from HTF supply zone to the HTF demand zone. What about ITF? ITF just reached the demand zone. ITF means daily here. They just reached the daily demand zone. And the pending orders in the daily demand zone pushing the prices up. The prices are moving. That's why the ITF price direction is ITF demand zone to the ITF supply zone. But I clearly told you, you cannot trade when short, you cannot go for short trades when ITF price direction is a demand zone to the supply zone. Only after changing the price direction in the ITF time frame, then only you have to take the trade. This is the point I told you, but here you have to observe one interesting point. It looks like the price direction at this point of time, the price direction in ITF is demand zone to the supply zone. Demand zone to supply zone, we don't take trades, short trades. But see, if you observe very closely, this is a tricky situation. By the time prices entering into this, our LTF supply zone, that is 75-minute supply zone, prices would have already reached into the daily supply zone. Once prices reaches into the daily supply zone, price direction will be changed from daily supply zone to daily demand zone. Because there is a zone confluence, 75-minute zone is having confluence with daily zone, definitely we can go for short trades. Because ITF price direction is now changed. The moment prices enter into ITF supply zone, the prices will be, direction is changed. Maybe some few candles may stay inside the zone, but direction is changed. That's why within the zone, whatever the zone confluence, they are acceptable trade. And also remember, by the time prices enter into this 75 minutes supply zone, your ITF price direction is changed towards the demand zone. Even HTF price direction also will be changed to the, because prices first enters into this HTF zone. After that they enters into the ITF zone. After that they enter into this LTF zone where we are planning our trade. The moment prices enter into the HTF supply zone, HTF price direction is changed to supply zone to the demand zone. Similarly, after some time, prices enters into the ITF supply zone, ITF price direction is changed to ITF supply zone to the ITF demand zone. That means for our LTF, price direction at HTF is in our favor and price direction in ITF is also in our favor. Both are showing that now prices will go down. When prices are going down, are about to go down. They are telling that now prices are about to go down. They are not going down, they are about to go down. When they are about to go down, obviously we have to take short trades. You know that prices will be going down very soon. Obviously you have to prefer short trades. That is what we are doing here. That means by the time, now see at this point of time, ITF is not favoring. ITF is not in our favor. ITF price direction is not in our favor. But by the time prices enter into this zone, ITF will automatically be in our favor. This is the key point you have to observe. This is a special scenario. That's why I have taken this example to make you understand. Because many people will reject this trade, thinking that the current ITF direction is from demand zone to the supply zone. When prices are traveling from demand zone to the supply zone at ITF, we should go for long trades. But actually what's happening? The price direction is getting changed the moment it enters into the ITF supply zone. Automatically price direction will become our favor. The moment the prices enter into this ITF supply zone, now automatically price direction is changes to supply zone to the demand zone. Supply zone to the demand zone means prices are going to fall. That means it should support the short trades. So that is the reason why the zone confluence is a special scenario. In the zone confluence, automatically price direction will change. So that is the reason why always you look for anticipatory price direction, not the current price direction. By the time prices enter into your LTF zone, what could be the new price direction? That is what you have to see. Trend also the same. By the time prices enter into your zone, what could be the new trend? That is what called anticipatory trend. So anyway, trend is not changing because no demand zones, nothing will be violated. I mean, no supply zones before, not demand zone. Sorry for my mistake. Because no supply zones, nothing will be violated. I think previously also earlier I said demand zones. Please correct. It should be supply zones. There are no supply zones in between. So no violation of the supply zones. So trend won't be changed. But price direction will be changed because of the zone confluence. Whenever you can see zone confluence, you can immediately say price direction will change. Okay, now price direction is in our favor. Which price direction? Both HTF as well as ITF by the time prices enters into this supply zone. So if that is the case, what could be the score? See here, supply zone at downtrend. Sorry, I'm looking into trend. See here, the HTF supply zone, by the time prices enter into our LTF supply zone, your HTF price direction is from supply zone to the demand zone. And also ITF direction also will change. That is also supply zone to the demand zone. When LTF is prices are entering into the LTF supply zone. And what about the curve? High on the curve. Look into the curve. Now, if you look into the curve, maybe you see, because I already having experience, I can directly say this is high on the curve, LTF zone. But because you guys are learning now, just draw the curve. You know, I already told you, use info line. This is the info line. How to draw? Distal line to distal line of between these two zones. This is the info line. This is 1172. 1172 divided by 3. Because the total length is, the total range is 1172. So divided by 3, you got 390 approximately. So what is this distal line value? 7477 plus 3. What is the value we got? 390 plus 390. So at 7867, you draw a horizontal line. Copy this value. Horizontal line. You draw somewhere. Let me delete this blue color line. Double click. Go to the properties. In the coordinates, you copy the value. Automatically the value is adjusted. This is a low on the curve. Again, you add up another 390. This is 8257. Copy this value. Now again take the horizontal line. Somewhere you draw, double click this. In the coordinates, you copy the value. It is converted to 0.8 point. I'm deleting that. Okay, 8257. Click OK. So this is equilibrium. Between these two blue color lines, equilibrium. Below this first blue color line, it is high on the curve. And here it is, this is low on the curve, and above the blue color line, high on the curve. In the early stage, you just add some text. Low on the curve. This is equilibrium. And this is high on the curve. That's it. Copy near to the current price. Otherwise, when you move to the lower time frame, it won't be visible. Okay, go to one now 75 minutes time frame. See here. Where is your supply zone? Your supply zone is on the high on the curve. See, initially you will draw, you will do these calculations. Once you get some experience with your eyes directly, you can tell. Okay, this is in the equilibrium. This is in the high on the curve. This is in the low on the curve. That kind of clarity you will get. Because visually, this entire range you will divide into 3 parts and you will be able to understand in approximate way. You can tell. If any doubt is there, at the time you can draw. You can do this analysis. So what is the score now? See, HTF currently price is moving from, not currently, by the time prices reaches to the supply zone, the price direction on HTF is supply zone to the demand zone. ITF is also from supply zone to the demand zone, and our LTF curve is at high on the curve. Because it is high on the curve, even equilibrium also, in this price direction, equilibrium also you can use score 2. In this price direction, if the price direction is opposite, the statistics will change, as I explained in this slide. So currently we are getting a score 2. So enter 2. So what is the total score? So it is 14. See here in the sum, in the Excel sheet in this toolbar, you are seeing the sum is 14. Just enter, type 14 here, that's it. Let me put it in bold. So out of 15, we got 14. It is amazing score. So definitely this could be a very good zone to plan our WIT trade, weekly income trade. Because you have a very good odd enhancer score. But still, you have to fine tune this zone up to 5 minutes and you need to check the quality of the zone, as I suggested in lesson 16. Go to 15 minutes, check the quality of the zone, 15-minute zone. Again, go to inside 15, go to 5 minutes, check the quality of the zone. If there is a good order flows are there inside, you can say this zone is a very good zone. That is the additional check you have to do. But where you plan your trade, either you plan at the type 1 proximal, or maybe if you want to further reduce the risk, make it a type 2 proximal. This is the way. Now if you are planning like this, you get even more reward. Probably you may get maybe 1:8 or 1:9 you will get, because the risk is reduced, you get more reward till this demand zone. Sometimes in a bearish market, you might miss short trades. Maybe proximal type 1 entry itself prices reach and then they go down. Because you have a good reward. And if this risk is within your acceptable level, that is lesson 19 you will be learning. What is the maximum percent risk we can accept? What is position size? What is stop loss buffer? Everything I will explain in the next lesson, lesson 19. But before that, some more examples we need